S&P 500 Index, SPX, chart analysis, interest rates and market rally. Over the next few minutes, we will analyze the recent performance of the S&P 500 Index, SPX, and discuss the impact of interest rates on the market rally. We will also highlight key economic reports released during the week that influenced investor sentiment. The analysis is based on long-term chart analysis and aims to provide insights for investors looking to make informed decisions. Last week's performance. The S&P 500 Index, SPX, experienced fractional losses for the second consecutive week, with a decline of -0.13%. Despite the losses, the market remained relatively stable. Interest rates and market rally. This week, the focus was on interest rates and their potential impact on the market. Investors pushed stock prices higher with hopes of rate cuts starting in June, as indicated by Federal Reserve Chairman Powell. The expectation of 3 rate cuts this year fueled optimism among investors. The conservative S&P 500 strategy. The conservative S&P 500 strategy is designed to protect investors from bear markets. It is based on long-term chart analysis and does not make changes based on emotions or news events. This strategy allows for fluctuations in the market and does not attempt to time every small up and down movement. Current chart analysis. The SPX remains well above its 50-day and 200-day average lines, indicating a bullish trend. The index has been powering ahead since early November 2023. However, it is important to note that this rate of gain may not be sustainable in the long run, and a correction may occur. As long as breadth remains positive, the gains are expected to continue. Inflation data and market outlook. Inflation data plays a crucial role in determining the market outlook. Investors will closely monitor the Consumer Price Index, CPI, and Producer Price Index, PPI, for indications of lower or higher inflation. Positive data pointing to lower inflation is likely to drive the markets higher, while higher inflation data may lead to selling pressure. Key economic reports. Several economic reports were released during the week that influenced investor sentiment. The NAHB/Wells Fargo Housing Market Index showed increased confidence in the housing market, driven by the lack of existing inventory and low mortgage rates. Housing starts in the U.S. also saw a significant increase, indicating a strong demand for new home construction. The Federal Reserve left interest rates unchanged, but signaled the possibility of 3 rate cuts before the end of the year. Mortgage rates experienced a slight increase after hotter-than-expected inflation data raised uncertainty over future rate cuts. The S&P Global U.S. Composite PMI indicated a solid monthly improvement in business activity, although service sector growth eased to a 3-month low due to price pressures. Conclusion. Based on the analysis, the SPX position in the conservative S&P 500 strategy remains bullish. Aggressive traders are advised to consider the Ridex Nova S&P 500 Fund, RYNVX, or other bullish S&P 500 index funds or ETFs such as SPY. It is important for investors to monitor inflation data and stay updated on economic reports that may impact market sentiment.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.